Warren Buffett is wrong. Okay, not exactly. Berkshire Hathaway has outperformed the S&P 500, largely utilizing Warren Buffett's buy and hold strategy. But what is the one major fundamental flaw with that strategy? This is a weekly chart of the S&P 500 since 1993. And of course, the buy and hold strategy has worked very well over this time period because the markets have done nothing but go straight up, right? But what if the markets don't continue to grow at this rate? That is a large fear that a lot of investors have before putting their money into the market. Well, the strategy I'm going to show you today is a way that you can more actively invest your funds while protecting downside risks. You all just make sure you hit the like and subscribe buttons down below, and I'll jump into the information. This is the daily chart of SPY, an S&P ETF. And as you can see here, I have a written strategy that has bought 113 shares. It's $5,000 worth of SPY on January 29th, 1993. And if I zoom all the way out and scroll all the way over, you will see that it has just never sold. All it did was buy. This is to represent the buy and hold strategy, right? And that $5,000 initial investment that you made on the last day of January in 93, today on July 11th, 2023, is now worth $44,844, which is amazing. And I just want to say before we get into this too much that I have nothing against the buy and hold strategy. I actually myself am a large proponent of buy and hold investing. Most of my money in the stock market is in S&P ETFs that I just plan to hold. But
do it.
I understand that that is not for everybody and that a lot of people want to protect their downside risk. That's why I made the strategy I'm about to show you. Let's talk about some of those downside risks, because even though you're up $44,000, during COVID, going into this, you were up $33,000. So your $5,000 had turned into $33,000. Towards the low of COVID, you were up $22,000. So you dropped 11 grand or 1/3 of your portfolio growth in like a month here, maybe even less than a month. You dropped 11 grand. During the most recent bear market, you went from up 49 grand to up 36 grand. That's a $13,000 pullback. If we go back, this is the 08-09 crisis. You were up 12 grand. At lows, you were up only 3 grand. So you dropped over $9,000 of your portfolio profits back here. It's like, are you willing to go through some of those huge risks? And as we all know, once again, because we now have hindsight history on our side, oh, well, Trey, the market always bounces back and that's all great, fine, and dandy, right up until it doesn't, right? The market does not have to bounce back. It always has, and there's a good flying chance that maybe it will continue to do so for the foreseeable future. But what if it doesn't? And that's the strategy I'm about to turn on the chart and show you right now. Alrighty, so here is the strategy on the chart behind me, and I'm sure where all of your eyes first went is to the P&L, which you can see is at $23,000. So yes, it pretty much largely underperforms the buy and hold strategy, but that doesn't tell the whole story. First things first, let's not waste any more time. Let's jump into what the strategy is doing. If you want this code exactly so that you can have it on your chart and manipulate it to what you think works best for you, then make sure you click the Discord link in the description down below. And then once you are in the Discord channel, if you go ahead and navigate to server subscriptions, you will have an area in which you can sign up for this code and every code I've ever made and every code I ever will make, as long as you remain subscribed. But anyway, shilling out of the way, short little ad, not bad. Let's jump into what the strategy is doing. So if we jump into the inputs of the strategy, you will see that I am starting off with $5,000 in buying power, just like we did with the hold test. You can see we are using a simple 500 moving average length moving average. And I say that you can get this code because obviously you can come in and you can change all these values to find what works best for your strategy, right? If you have access to this code. And then we also have a buy RSI set at 50 and a sell RSI set at 30. So what the code is doing is it is getting long if the close of the bar is 1 over whatever moving average length you have set. So I'm just going to go off what the current parameters are. If it closes over the 500 length simple moving average, and if the RSI is over 50, it gets in, and then it gets out when the RSI breaks below 30. Let's go ahead and scroll through a lot of those same test cases that we looked through before. I actually will point out a bad one here first. It did still catch almost all of this entire current bear market. So it was up 27 grand going into before this trade. At the end of this trade, it was up 21 grand. So it lost about $6,000 there. It doesn't avoid everything, unfortunately, but you can see here during COVID, I mean, look at where it gets out. Remember when during the hold test, I think it dropped a bunch of money during COVID, right? But here, when the market drops from 339 down to 219 in about a month and a half, you get stopped out at 314. And that's kind of the whole principle of this strategy, right? Of this active trade strategy, is that it allows you to capture a lot of the upside, but protect yourself from some of this downside risk. So this is a better, not just back-tested strategy like the buy and hold strategy is, in which it really only works in a thriving market, right? This strategy will protect your downside risk in a weak market as well. If we go back to and scroll through, you can look at a lot of the trades here. If we go back to the 08-09 time period back here, you will see the strategy got out at 134. It did get back in, but then got out at 128 instead of dropping all the way down to $68 that SPY did drop down to. So if you're afraid of bear markets, if you're afraid of downside risk, this strategy is going to help you protect against that downside risk. And yes, we are buying a high RSI and selling a low RSI. You may notice that in a handful of my strategy videos that I've posted on this YouTube channel already and will continue to post, that I have found that buying a high RSI and selling a low RSI is actually more beneficial than the flip-flop, which a lot of people end up teaching. But it makes sense, right? You want to be buying when others are buying, and you probably want to be selling when others are selling as well. So I do have one more very important thing to touch on with this strategy. You may notice, you may have seen some of these trades up here, and you're like, well, Trey, that's not $5,000 in buying power. This first trade, when it bought 106 shares at roughly $48, I can't tell exactly where it is, but this is a $5,000 position. Every position after that is 5,000 plus whatever the floating P&L is. So here it takes 102 shares at $66. That's obviously roughly a $6,600 position. And it's because in this first trade, it made $1,600. That's another added benefit to not just buying and holding, is that you get to rescale your entrances according to what your profit is. And this strategy does that. So this strategy has built-in compounding alongside with it. But I'm just going to quickly scroll through here, let you guys get a good glimpse. Once again, here's a decent downside protection. And I understand looking at this right now, it's going to be like, well, Trey, this just sucks. It just underperforms buy and hold. And yes, I understand that. And as I said earlier, I still very much agree with buy and hold. But I want you to envision a market that doesn't bounce back. So when you get stopped out here at 119, it does go all the way down to 77. Of course, it then bounces back. What if it doesn't? What if it just goes down to 50, 60, 40 and hangs out down there for a few years? You know, all of a sudden you've saved yourself a bunch of downside risk. You've locked in a profit that you've already made. Instead of giving it all back and risking your capital, you're already out of what could be a really bad bear market, right? You're already out of this giant pullback, and you get back in when it's strong again. When it begins to prove strength, you begin rebuying, right? The moving average is going to come down so that it needs less and less strength to rebuy. So that's all going to work out for you just fine as well. But that's the strategy. Once again, if you all want the code, make sure to join the Discord in the link below. Click on server subscriptions, $25 a month, access to this code and every code I will ever make as long as you remain subscribed. Make sure you guys like the video. Make sure you subscribe to the channel if you want to see more strategy videos like this. With all that being said, I'm going to go ahead and sign out of this video. I will Catch you all in the next one.